Shares of insurance behemoth LIC extended its losses for the sixth straight session today and hit a new low of 755 rupees on the NSE. After this intraday low, LIC share prices today quoted around 21% below its issue price of 949 rupees. Market analysts expect LIC share prices to come further down as it's facing an overhang of a 1-month lock-in for anchor investors. But, the big question is, what is ailing the LIC stock? Remember, it's one of India's largest IPO. It is the biggest life insurance company we have and has a lion's share of the market. So why has the stock failed to attract interest, for example, of FIIs? And its Q4 numbers were also not so encouraging. The bigger question as well, is this giving us a sense of the IPO overhang sort of fading? Is the interest in IPOs now diminishing? To speak on some of these issues, I'm joined today by Aditya Shah, CIO of JST Investments, and Abhishek Basu Malik, founder of Intelsense Capital. Welcome to both of you, and thank you so much for speaking with us. Aditya, let me come to you for your take first. What do you think is ailing the LIC stock?
Tamanna, good evening first of all. As I had said at the time of IPO, only long-term investors should apply. The whole fortunes of LIC depend on how the company is able to formulate a turnaround. We already know the operating metrics of the LIC as a company are amongst the worst amongst all life insurers. If you look at the new business margins, they are the lowest amongst all life insurers. They don't sell as many protection plans as many other private life insurers really do. As a result, their new business margins are at 8.8% as compared to 26-27% for a private life insurer. Their persistency ratios as well are not at the level of a private life insurer. So, as the management is saying, they will try to improve these metrics as time really goes on. And if they are able to deliver on the improvement of metrics that could happen in the next 1 or 2 years, only then the stock will get re-rated from here. We had seen HDFC Life doing a similar thing. During its IPO, it had come about at a valuation of 1.5 times. And as the business metrics improved, the valuation expanded for the company. Now it trades at about 3 to 4 times embedded value. So short term, you should not be expecting any bounce on the stock. You have to concentrate on the business metrics as slowly and steadily for a behemoth like LIC. The business performance will slowly and steadily.
You're saying long-term investors should stay in. A lot of insurance policy holders also came in. This was in fact their gateway to the equity markets of sort. And some came in for the listing pop. What is going to change for long-term investors?
Was a question for me, Tamanna?
Yes, Aditya, that's a follow-up for you.
Yeah. So in the long term, what is going to really happen is the business metrics, the business performance of the company will steadily improve. The management has guided that over the next 2 years, they will try to increase the share of protection plans, which has a profit margin anywhere between 50 to 80%. That could see the eventual new business margins improve from about 8 or 9% right now to about 13 to 14%. And if and only if the market sees that the business metrics are improving, then the stock price will perform, which is repeatedly, which I have said during the IPO time as well, and now I am saying as well, that be patient, look for the turnaround plans getting implemented on the ground, only then try to take new positions, or if you have old positions, then you should hold on to them with patience and wait for the business performance.
Yeah. Abhishek, what is your take on the way LIC has performed in the last 5 or 6 days and implications for the retail shareholders and retail investors in the stock?
Again, first of all, thanks for having me on your show, Tamanna. I think, again, like I've been saying from the beginning or from the IPO time, LIC is not a stock that you would want to buy for growth. Right? For growth investors, this is not the stock. If you are an investor who is looking for very long-term, stable dividend plays, then this is the kind of stock that you should be looking at. Now, if you or if an investor invested because they were lured by the discount for retail investors or for policyholders or for the IPO pop, then your thesis has gone for a toss today, right? I mean, the pop has not happened. So now if you are getting anchored to the price of the IPO and you think that, okay, I will only exit if I get my price back, that is basically, doubling up your mistake. No, you've made a mistake while getting in, you're making a mistake while holding on. If it does not fit into your framework of the stocks in your portfolio, right? So there's no right or wrong about a particular company. It depends on the individual investor. But my take is that if you are looking for growth, if you're looking for compounding returns over the next 2 to 3 years, then LIC is probably not the stock for you to be in.
Yeah. So what really is the path forward now? I hope for listing gains.
Like I said, you need to gradually get out. I can't predict what is going to happen tomorrow or in 1 or 2 weeks.
Right.
We might see a bounce back in the markets. You might get a slightly better results, right? Markets never go one way, right? It's if it has been falling for a few days or a couple of weeks, it doesn't mean that it will keep falling all the time. There will be days where you will get a bounce back. Use that to partially get out and get out at a as and when you feel you're getting a reasonable price.
In the long term, and I asked you about this, Aditya, what are the prospects of the company, the fundamentals of the company? Because I remember all of the commentary during the IPO and your commentary as well was talking about how at the end of the day, LIC is a giant. Its brand recognition is there with pretty much every Indian. It has more than 60-65% of the market, and India has a very low insurance penetration in the first place. So by those parameters, the sky is the limit for LIC.
Absolutely, Tamanna. If you look at the sectoral outlook continues to be extremely strong. Insurance is a sunrise sector. Financialization of savings is a big theme to play for. LIC, on its part, it's a behemoth. It's got everything in the book that is really required. A strong distribution. It has got a humongous size on its balance sheet, 45 lakh crores of AUM that is there. But the problem really is it was working as a government company. The product mix of the company was not oriented towards maximizing the profits for shareholders because government was the only shareholder before. Now, as it becomes a public listed company, it has to work towards maximizing the shareholder profits and move towards profitable businesses, push those businesses onto the distributors, even though distributors will make lower margins on those businesses. However, the shareholders will make massive gains if they are able to do that. And the whole premise of investing in LIC will be the re-rating that can happen from here on, provided the business turns around and you see a expansion in margins, increase in persistency ratios, pick up in the new business growth that is there that the company is taking. The company can really do it, but will the company implement it? That is a question only time will answer.
Is there some overhang of the fact, Aditya, that it is at the end of the day, a PSU? It is a government-run company, and some of those fears are also creeping in that as times get tough with global factors, etc., that LIC will be called upon to do more.
Tamanna, this was a fear that was there during the time of IPO as well, and there should not be any doubt that the government will try to use LIC at instances where it wants to use its agenda, and the government is not wrong because it is the largest shareholder and it has the right to do it. So I don't think that these fears are warranted because this was already known during the IPO time. And the truth today is LIC will be used as and when the government really wants to get out of a situation. So that's not really the problem. The point here really is ever since the IPO, the market has seen a little bit of sell-off and the improvement will take a little bit of time, which now what is really happening is people have not seen listing gains and some of them will exit. And as you also said, the anchor investors will start to exit as well. So that could put pressure on the stock price. And that's the whole story. That's why I said no short-term investor should invest in LIC. It's a big company, and big companies generally take a lot of time to transform themselves, or they don't even transform themselves. So to wait and watch and see the transformation of the company.
Okay. Thank you so much, Aditya and Abhishek, for joining us and just breaking down for us what has been happening with the LIC stock. I hope all of those who have invested in the LIC story can gain from some of that analysis.